Hello, welcome to this episode of Deven Chase Podcast. Thank you so much for tuning in. I am your host, Deven Chase, and I want to spare you all the pleasantries of a long introduction and kind of get right into the reason for this video, the topic at hand. And that subject is what happens in a recession, right? So I want to really be able to talk and maybe be a little long-winded, but share these things and unpack what takes place in a recession. And I'm basing all these from my own personal experiences of being in business and being in real estate during the last Great Recession, which took place right around 2008 and on into 2011, 2012. And starting with that, I remember working as a loan processor and a loan underwriter with a giant banking institution where, look, I was just 20 years old, but I worked through the transactions in originating home loans and providing second home mortgages for clients. And I remember doing the matrix, because that's what we go by. We go by a matrix or formula in order to find out if these people can cash flow or budget or basically afford a home mortgage. And I remember during 2007, the credit policy of the bank loosening a little bit more and loosening a little bit more. And when a credit policy loosens, that basically allows more people to be able to qualify for a home mortgage. And I do remember the talks between other underwriters and kind of the, what do they call it, the water cooler conversations on how some of these deals are feeling a little sketchy, right? But as an underwriter, you are in charge of budgeting these files to make sure a client can afford it, but we're using it based on the formulas that are set down, from above, to us, if you will. So I say that to say that at 20 years old, it was really just a job for me. I did not necessarily know exactly what was taking place, but that was the breeding ground for me in real estate, right? So here comes 2008, and this is when the what we call the housing crisis took place. And in that housing crisis, you almost watched everything kind of bottleneck immediately. What first took place was, first of all, less loans were able to be produced or qualified from said bank. Second of all, in working in a bank branch, I remember there being a big issue in liquidity, not just with the banks, but also with the consumers and the people on Main Street and the account holders, if you will. So at that time, the account holders would come in and they were worried about their funds. This is where I learned about FDIC insurance and how much of an account holder's money is actually insured should a bank no longer be solvent, right, and go under. So these are all these things where I learned that there was panic, truly. And at the same time, I saw those that were calm, that had kind of seen this before, and they had a different kind of way of life and a different way of looking at the matter at hand. For me, honestly, it was great for me to have mentors and older gentlemen that I knew that I could reach out to kind of ask, is this normal? What takes place next? Because at the time, it really felt like the world was going to end, right? So the main point of this video is not to speak of doom and gloom, but this is to inform those who may be wondering what is to come or what happens when you experience a deflationary period in mass, whether nationally or globally, and kind of what to expect, right? So we can't necessarily predict the future, but we can kind of use empirical observations on what's happened in the past to help guide and inform us in the future. And to be honest, I would be looking for someone like me, now with these experiences, and that's what I'm doing. I'm kind of sharing that information. So back to what I was saying, when I was working in the bank branch during the actual Great Recession, it started as a housing crisis and just something that was isolated in the housing market. But of course, that ended up branching into a banking crisis, and then that led to an economic downturn. And this was during the Obama years, right? So at the bank, clients would come in again. They'd ask about, is their money safe? A lot of people would pull their money out of the bank, or they'd go to their safe deposit boxes. I didn't understand or know of any talk about gold and silver, but of course, as we look back at the trade lines during that time, gold and silver spiked, right? So that's something that you can kind of look into or look for in these upcoming months or perhaps years with what we're experiencing today, right? What else took place? Also, there was credit retraction, or what they call credit tightening. So let's say that you had a credit card, and as a good consumer and someone who cares about your credit, you had a limit of $5,000 and only used $1,000 of your credit. So what happens in a credit tightening period is the bank or the lending institution or whoever you've got this credit card with now assesses all of their clientele and begins to cut or reduce credit limits for all of their clients en masse. So if you were holding a credit card with a $5,000 credit limit and you've only used $1,000, they might come and cut your credit limit to $2,500, okay? Or they might cut it completely and close the account and say, your credit card is now maxed out, right? And from a banking perspective or from a big business perspective, what they're doing is damage control. In that liquidity situation where there is a shortage from a big business perspective, the first thing that you want to do generally is do that damage control and reduce the amount of risk that you are exposed to at that time. And that's what these banks do. Even lines of credit. So, you could have a home equity line of $100,000 where you're maybe doing a remodel or a renovation on your home, and you've only used $25,000, let's say. The bank might come in and reduce it to 50, so now you've only got 25 grand to work with, or just cut it completely, right? So obviously, generally when you get credit, that's what you get it for. You get it for a rainy day, you get it to have just in case you need it. And then when you need it, these banks actually come and cut it. So that is what happens in a credit tightening phase. Okay, so we've talked about kind of the buildup, and now we're talking about kind of the fallout, when you're kind of over the hill of a retraction, when you know for a fact that a retraction is happening, or a deflationary period, if you will. So in that time, you've got the liquidity issue, the dash for cash, then you've got the credit tightening, which takes place, and then you've got kind of a bottoming out of the stock market. The stock market is receiving a lot of action, okay? There are stocks that you know and love that are always performing well, not doing so well at this time. And what I noticed is that, the industries don't necessarily reflect what is to come or what's happening at that very moment, because these businesses operate on a fiscal cycle where they report earnings quarterly. So when it comes to property values, which did begin to reduce, that didn't start happening until the data came in, until home sales started to slow up, or until properties that sold for, say, $300,000 started selling for $280 or $270. And as this data came in, then you would start to see property values reduce in mass, because the comparables over, say, one neighborhood or neighborhoods or cities, if you will, went down in certain percentages. So that is kind of how you can expect, should this happen now in 2020, for things to kind of roll out, if you will. Next quarter, we might experience what we're seeing now. and third quarter earnings, we'd experience what was happening in the second quarter. So when you are going to invest, if you're thinking about trading or taking advantage of the market, being in a place like this where stocks are a lot lower than you're accustomed to seeing, for some people they may see that as a time to get in while it's low. And I'd say that to be true. But at the same time, you want to make sure that you're not catching a falling knife, because you can buy into a stock that is still on its way down and you haven't caught the bottom yet. So I say all this to say that in my experiences, I've seen others experience these things where they really want to succeed financially, and I think that that is the main goal. The first thing to do is, of course, to remain calm, because you can't let fear set in. Business must continue to be done, and business will continue to be done. So the world is not ending, in that sense, or at least it didn't in 2008. So getting back on topic, when you're looking at the stock market, when you're looking at should you sell a property that you're holding or buy a property, it is very good to look deeply into the market and see if there are opportunities for you to get in low and buy a property at a discounted rate or price. You don't know the financial situations of the sellers or of others, so you never know if you're going to be able to pick something up at a great deal or a wholesale price. That's another reason for this video, to reach out and to speak to others and have this conversation, because again, at the time when I was a real estate agent during the recession, I really had to cut my teeth at this, in real time, which I was able to do. But I worked as a housing counselor where I spoke to people who were really in a panic, homeowners and citizens here in Las Vegas or Southern Nevada, about their options when it came down to foreclosures, short sales, bankruptcies even, and what to do and what their options were. At the time, laws and new pieces of legislation were passing on a daily basis. So if you didn't keep up with these things, you really didn't have a clue as to what to do. And there were so many professionals and even scammers who took advantage of these homeowners. So it was so important for myself to stay in tune with the information and to share it and to reach out. So again, had I seen videos like these at that time, I think I would have been better off in speaking to others. But I did do a lot of business in that time. Let's see if there's anything I want to discuss, or if this will be a short video. I think I'll just stop it there, but please comment down below if there are other things that you think I should speak about or that I didn't mention, or maybe your experiences. Shoot me a message and let me know. And also please like and subscribe. I'm going to keep these videos coming. I'm going to be sharing a wealth of information with regard to business and real estate in the days to come. And we'll talk about also what happens in an up market. Okay, so thank you again for tuning in, and I'll talk to you soon.